Good morning. It is Wednesday, March 23rd, EIA Day, 5:48 a.m. Chicago time. Take a look at the risk disclosures and hypothetical performance disclaimer on my website before trading any of my strategies. Futures trading does contain substantial risk and is not for every investor. Past performance is not indicative of future results. The news is settling in, and the big thing, other than the, of course, obvious of what of the events yesterday, I wasn't able to put a video out yesterday morning. I was monitoring these events and I had a migraine. I could barely keep my head at my trading desk. In fact, I did have to go lay down before the market open. It's springtime in Houston, and what a day to get a migraine, huh? I don't know if it was a stress-induced migraine with the spring allergies, but it was a doozy. But I'm much better today, thankfully, and can concentrate on the markets. I did notice that the markets were very resilient yesterday, as my market analyzer had held up very well. In fact, had turned back into the green during certain parts of yesterday's morning RTH session in the US session. But today is a different story. We have our high at 2047.50, and we are coming into divergence right now. I'm pulling off of that high. Now, I don't know if we'll get a third spike up into this resistance box. I always draw my resistance box on my wicks, and I wait like a little spider to see the reaction in my resistance box. So I'm going to wait for my red candle, and I'm going to jump on it to come down to this low volume node at 26.75. Now we could blow through that and come down to this high volume node at 2007. One thing that you should be paying attention to is we've had 3 days of sideways market action. Well, from the 18th, 21st, and 22nd, that's 3 days. Thursday, Friday, and Monday. Tuesday. What is today? The 23rd. Wednesday. Today's Wednesday. What are my days? So Friday, Monday, Tuesday, Wednesday. Okay. Everything blends together after a while. So we had this nice run up, and we printed sideways, and it looked like we were going to break higher out of the range, but all it was a stop run. And we've come back into the range. We tested the box twice, and we're pulling back. Looks like it's pulling back. But the main thing for you to be looking at is the divergence. That's divergence. There's no momentum. If we take a look at this on the 30-minute, I do have a green, like a trend continuation, but there's no momentum. Okay? So either the momentum's going to have to really kick up and drive this up to 2050 and higher, or we're falling back to those low volume nodes. And because we were stacked up for 3 days in this high volume peak, we clear the bottom of my river of gold on this composite. We clear below 2039.75, 2039.50. We get below that, and that's all she wrote. And it could be all the way back down to 2007 fast. Like when you move up in a market, it's like walking stairs. When you move down in a market, it's like taking an elevator, okay? It's faster coming down. So it's like people are going to be saying, well, how did that happen? Well, it's because there's nothing here to hold it. Here's the air pocket. I call them air pockets. That's one good thing about not having a formal trading education or economic background. You get to name things your own self. Call things the way you see them. And this, my friends, is an air pocket. Here's your low volume node. That's like the obvious target of where it's going to leave a high volume area, go to the low volume. And then where does it go? It goes to the next high volume. So here's your 1, 2, 3, and it's going to be on an escalator down fast. So before you know it, we're going to be down at 2007 and people are going to be shaking their heads. Okay, so the other scenario, if there is upward momentum that gets this back up and over 2050, is just hit buy, because the market's going to be coming in here and sending this up. But for right now, I don't see that. There's not any evidence that there's going to be the strength to send this up and over. So if you want to put a stop above this, you can put really a 1-tick stop. It's either going to hang or it's not. That's the one good thing about divergence is you can rest behind these pivots pretty easily. And what ends up happening is if the market does get up there and kicks in those stops, that's what propels the market in the other direction. Okay, so, but right now we don't have the momentum to signal that this is going to go anywhere except down. We didn't have anything really for me to trade on. Got my down signal after the market closed, well, 14.18, just before the market closed, and then it went sideways. So I do have a green signal on the current high and the generic, but so I could be wrong and proven wrong, and this could get up to yesterday high in R1, get those stops. You just never know. I do have a momentum inflection, so we'll just have to see how this breaks out. And it could fall at R1. I mean, you just never know. It could do its stop run, and the market makers who control the markets, you just absolutely don't know. All I know is we're fighting a calendar. It's March 23rd, and I've got one day. Friday is a no trade day, and then the 28th through the 31st, they're going to be clearing their portfolios. They want these profits. I know that they want these profits, so it's either going to fail here or somewhere close around here before it starts coming down. So for what it's worth, portfolio managers have to make their money, and it's at the quarter end and month end, so I'm sure they'll be booking profits soon. Okay, so let's look at the euro. Here is the direction guide showing when to get back in the market yesterday. It's on the currencies. If you put it on the generic, you see that you get all of the generic is when the weekly, daily, 60, 15, and the core conditions meet. So we know that we're in a downtrend currently, and we're now retracing. We came down to the bottom of this current retracement. Well, I had actually that's the one thing about Fibonacci's is sometimes don't get them always right. Here, let me do this. And that doesn't look right either. That's the problem with Fibonacci's. You never know where to take your previous swings. I did have it nailed, a previous fib. Maybe it was this one. I think it was that one. Take your swing high to your swing low, and that was it. And you see that it went down and hit, well, almost hit your target areas. But irrespective, that's why I really don't like Fibonacci. It's like, which Fibonacci are you trading? Because I can guarantee you somebody else is not trading that fib. So usually it's the daily swing high and low. But irrespective, we know that we're in a downtrend, so you wait for your retracements, and then Dow theory, you wait for your retracement and take your trade at a support resistance area, or you wait for your Dow theory higher high, higher low, and lower low to kick in before getting back in, if you don't know if the retracement had ended. Okay. So here's your 1, 2, 3 on the downturn. That's your way to know when the retracement ended. You wait for a low, a high, and then that low to get broken. Then you know that the uptrend retracement's over. So 1, 2, 3. And then you get in, leave a stop below the pivot, and just hold it. So that's really the best way to trade, in my opinion, is the Dow theory. Otherwise, you can just wait for a retracement in an area and try to take it. Sometimes they don't work out. They go for a higher pivot and knock you out, and there's nothing you can do but get back in, because as it turned out, this was the right retracement. If you had just waited for this pivot to break, then you know that you're in safe, and you can carry it back in, hold your stop, and then trail it on top of these highs. So once those highs get broken, then you know you can get out, and the trend is over, and it's going to go in for a deeper retracement. So trading 101. I hope y'all understood that. Let me show it to you once again. You get in on a pullback, retracement, short direction, your candles start printing back in the direction of the overall trend. Sometimes you get knocked out. So if you would prefer waiting for a confirmation, you will get a downtrend, pullback, and then you break that pivot low. So that's your 1, 2, and then you break your 2 period, 2 bar, and it's 3. 1, 2, 3. Okie dokie. And let's look at the crude. And the crude is just sitting there going sideways. We've had mixed messages coming out of the FOMC regarding the rates. Are the rates going to be dovish? Did we jawbone the rates down? And I got some insight into that reading Bloomberg. Apparently China sent the Federal Reserve an email asking for their help when they had a crisis a couple of months ago, and that probably impacted the Fed's decision on that global economic indication that they were talking about not wanting to raise this last time. Um, well, that makes sense if you get an email directly asking for your help because you're about ready to go under as a country. It absolutely makes sense. So that absolutely, solidifies why they did not raise rates. I would not either if some country emailed me and said, I need your help. We're about to go under. Um, Today, China's in trouble, big time. Let me put this on. Where was that? China, every time you go to Bloomberg, their page changes. Um, China's in big trouble. Here, their debt. They have 15 billion dollars to pay for these people that were working in their um, mines, their coal and steel mines, and they don't have the money to pay them. So they're starving people that they're having to, um, pay for their livelihoods as their huge transportation and everything shuts down as far as their infrastructure building and all that. All their empty cities have been built. So it's all the people that they were employing, pulling out of the fields to work, they've got to now support. So they're still in a big, 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 big problem. But we've gotten signals over the last couple of days from other Fed members saying, no, we're not going to be lowering the interest rate. We're going to be raising the rate. So that's like sent the market, the crude market, in a tizzy, like, what are we going to do? So it's hard to get a read, and there's been a little bit of additional supply build. The early indication is coming out of Cushing, so we're getting mixed messages about the build. Earlier in the week, it was positive, and now it's negative. So mixed messages in crude. So I will sit on my hands until that EIA number comes out, and that'll give me a better read on what to do. And rest assured that we might get a head fake out of the market today. So just be careful. The best thing to do is to wait for a higher time frame candle to print and then just go in that direction. That's why I like the Unirinkos. Because once you get a direction, crude is a trending market, you can pretty much just stay in that direction, up or down. So if you don't want to put this on a energy filter, just go over here and put it on your direction filter and just stay with that direction. You don't even need a color band for that, actually. You just go in that direction. Right now, the overall trend is down. So it's hard to say, though. We have mixed messages and the central bank, and mixed messages and the inventory number. So we'll just have to wait and see what happens. And with that, I will probably just be waiting for something to show itself in the E-mini market. It might be a good time to fade this now, or just wait for the open and see if they reach for that R1. Hard to say. Your call. I'm getting green signals, so the system tells me, well, no, I've just got a red. So, and here's your divergence. Your call. So y'all have a good day, and keep your powder dry, and we'll talk at you soon. Thank you so much.